morning to all of you. I'm truly delighted to be here today at the 6th Gold and Gold Markets Conference organized by the IGPC, which is hosted by the IIMA. In the last few years, we have seen that IGPC has emerged as a leading think tank in the gold policy space and is playing a very important role in enabling us to come together and discuss on how we can leverage this preeminent position we have in this gold to promote the India growth story, in the sense that how gold can help in further increasing our economic growth, generating employment, exports, and contributing to our GDP. I must also mention that IGPC is a knowledge partner of IFSCA, and right from the inception, when we conceptualized this whole concept of an international gold exchange to be set up in this newly established financial center, to actually setting up and then building it block by block, IGPC has been very helpful and has guided us through this process. When we talk about gold in India's context, it's not just a metal or even a precious metal. It is very closely integrated with our culture, our traditions, our customs, and we really cannot think about gold not having gold. I mean, it is that it is such a precious possession for every family, rich or poor. In ancient times, and maybe even until the British rule, we were referred to as Sone ki chidiya, okay? The golden bird. Of course, things have changed today. Today, we don't produce gold, as Professor Sahai mentioned. Hardly 1% of our requirement is met through our own production. And we are a huge importer, maybe sometimes the largest or the second largest importer. Because of that, right from independence, government has been very concerned about the growing gold consumption and has looked at various policy options of how to control this consumption. So whether it is Foreign Exchange Regulation Act way back when we had independence in 1947, or the Gold Controls Acts of 62, 68, and so on, we have been trying to control the consumption of gold. But we have seen it's very difficult to control the consumption of gold. It is a part, it's a way of life for us. It's very difficult to control the consumption of gold. So over a period of time, government has tried to manage this because gold is the second largest import item, and almost 50 billion plus foreign exchange gets spent for import of gold, and therefore it contributes to our current account deficit. Now you know that if current account deficit is not controlled, it has so many other ramifications on the economy, right from inflation to other things. So bulk of government policy has been focused on how do we control gold consumption, how do we keep gold imports under control, and they have used the tariff and tax tools to be able to try and regulate this. You have seen customs duty has varied from 0% to 15%, then sometimes it is brought down, sometimes it is brought up. But regardless of what you do, you are not able to control the consumption of gold. In the last, in order to see that there is a better understanding of how gold is being consumed, it has been a canalized item. We have been bringing gold only through this consignment model with some designated banks and designated agencies, export houses maybe. And we see that over a period of time, this has not been very efficacious. Not only that, the gold consumption has not reduced, but the unproductive nature of gold has remained to be as such. The idle gold, remaining in households or institutions, trusts, temples, has continued to be like that. We have not been able to leverage, the advantage of having, maybe some estimates are that 20,000 tons of, gold is there in the economy. We have not been able to leverage that. Much of it is unproductive. Even government's efforts to introduce gold monetization scheme, which consists of gold deposit scheme, gold metal loan scheme, all these things also have not made a big dent. There could be several reasons for this. One is how good is the whole system, what is the ease of going through this entire process. Secondly, historically, gold has been there. In fact, it has been a part of Stridhan. It has been passed on from generation to generation. Today, you say from where you got this gold. That's again a big issue. Though Income Tax Act says that 500 grams for a married woman, 250 grams for unmarried, women, and 100 grams for a man, you still have to pay the penalty. I mean, it may not be seized, but you still have to pay the penalty. There could be this and many other reasons for which we are not able to really recycle the idle gold, and we are still dependent upon import of gold. If you look at the importance of, now if you look at the consumption pattern of gold, the behavior, we see that more than 70% of the gold which is imported goes into jewelry. And more than 90% of the gold requirement is met through imports. Hardly 8-9% may be met through recycling, but that again through the traditional method where you have your household jeweler and all, and that gold is going. Gold coming or getting recycled through these schemes, etc., is next to negligible. Maybe since 2015 to 20, Mr. Somtharan is saying, but there's not much data here, but maybe 50 tons. I don't know how much tons we have been able to really get, from the idle gold into the supply chain. We had, for the first time maybe, when the Ratan Vattal committee was set up, looked at the gold from a holistic point of view, not looking at gold as a big concern from the forex angle and CAD angle. We looked at gold in a holistic manner. What role can it play? And that committee, in its report in 2018, came up with several recommendations. They even talked about financialization of gold. They talked about Make in India. They said how the tax and tariff has to be rationalized. Because if you see this sort of volatility in the tariff rates and sudden hike, etc., has often been counterproductive because it has created arbitrage. We all know these things. And that creates a lot of undesirable practices also. So, not only that, in spite of being such a large consumer, 25% of the gold production we consume annually, we are a very passive player in the international gold market. We are just passively price takers. In fact, when the Prime Minister inaugurated the international exchange, bullion exchange, in July last year, he said that we should become a price influencer, and as he says, a price maker, not just a price setter or a price taker. Now, how do we become important in the gold economy? We just can't become important just because we are largest consumers. We need to see that this whole market today, which is largely unorganized, gets more and more organized, by which more and more efficiencies will be there. We also need to see that there is a robust regulatory framework, because today that is also fragmented. Government has taken several steps, And the recent two major initiatives of setting up an international gold exchange in the international financial jurisdiction within India, and also setting up of gold exchanges within the domestic area. I think these are two major initiatives, because exchanges will enable us to have a very transparent price discovery. It will also be a very efficient platform in every respect, whether it is settlement or whether it is transparency, whether it is KYC, because you have an exchange, a clearing corporation, a depository, there are a lot of checks and balances, all the data gets maintained. What he said, Mr. Somsan, data is not there, all data will be there, it's all automated. So it brings in a lot of accountability, transparency, quality assurance. So whether it is quality assurance, whether it is sourcing integrity, whether it is price discovery, and also it's an ideal platform for financialization of gold. So in fact, gold has been currency for long. It's not very difficult to, gold as an asset class. Will it be a financial asset or will it just be a commodity? No, it all depends on how you will leverage that. If you have more and more financial products linked to gold, it will lead to financialization of gold. One of the reasons why an average, ordinary, typical Indian family has been keeping gold is not just love for the ornaments, it's a financial security. That's been a very important thing. That is why you see bulk of the consumption is in rural areas. Urban areas, people are financially literate, they understand, they may not put too much money into gold. But in rural areas, where maybe the financial literacy or the opportunities are not that much, they are all keeping gold more as a security, apart from, other things. So I think it is very necessary that we look at the whole ecosystem, right from Make in India, that is as an important part of the supply chain, because we have low cost advantage, etc. How we can manufacture gold, how the technology upgradation take place, how the skill development can take place, artisans, what sort of gold jewelries they can make which meet the current, current demand, nationally and internationally, globally, and what sort of financial products you can make, how you can promote exports of gold, and how you can allow market to determine. Today what happens is, for the first time since independence, RBI has allowed foreign exchange advance to be given to take gold through the exchange. It's a big thing what RBI has done. But we still, though there may not be any direct prohibition on export of gold, the value addition norms, etc., are such that we cannot export gold. Today we see that last few months, I was seeing some statistics, there is a dip in import. But does it mean that consumption has dipped? May not. The belief is that it has come through other sources. Even the SEPA gold, that means the Comprehensive Economic Partnership agreement between UAE and India, where you're offering a discount, 1% discount. For a high value item, 1% discount is a lot. But there is no demand for SEPA gold also. Because there is a $24, $25 discount going on. Now what happens is, in this dynamic market, we have, I think, 1,500 tons capacity. Some figures I may be a little, outdated, but it will give you a general picture. We have about 1,500 tons of refining capacity, but it is being used, hardly half of that is being used. Now the question is, can we use that full capacity? And when there is premium outside and discount here, can we make use of that arbitrage opportunity? Can we export gold and get that foreign exchange earnings? So is there anything wrong per se in exporting gold? I don't think. So export, import, these are all things like earlier you had licensing. You thought that with licensing things will improve, but when you dismantled licensing and opened it up to the market, efficiencies grew up. So sometimes what we think, and what sort of measures we take, they don't give those outcomes, the desired outcomes. So I think it's very important to look at gold from this multiple perspectives and act on it. Now finally, coming to the International Financial Services Center, let me spend a few minutes trying to give you an idea of what is this International Financial Services Center and why have we established this. You see, for an economy like India, which has huge potential to grow, but there is capital scarcity, you need to attract more and more capital. And to attract more and more capital, you need to be plugged into the global financial system. And to get plugged into the global financial system and to have a seamless connect, you need to have full capital account convertibility. And you need to have regulatory practices and regulatory framework which is aligned with the international practices. You can't have too many restrictions or too many controls. Now, whether all these measures can be taken for the country as a whole, you look at earlier efforts, Tarapur Committee 1, Committee 2, Percy Mistry Committee, all these committees have said that controls and restrictions have created inefficiencies and have impeded the capital flows into the country. So you need to dismantle. Then what is the strategy, what is the approach? The approach ultimately the government took was, while it's important to carry out financial sector reforms, while it's important to go for full capital account and convertibility, we can't do it for the country as a whole because it's a large country, there are many complexities, many risks may be there, macroeconomic risks we may expose. So let us do it in an enclave. Let us just do it in an enclave, a small enclave, which will be serving, the domestic economy's requirements. And in this enclave, we have carried out huge financial sector reforms. We have a unified regulator. Our regulations are aligned to the international best practices, and there is a lot of emphasis on ease of doing business. So it is in this context you'll have to see that when we are importing gold under the consignment model, lot of inefficiencies are there because pricing is based on tariff valuation, and then the timing of import and settlement is based on speculation, whether the valuation will go up or go less. So it's not demand driven. Ultimately, somebody is paying for it. Ultimately, the consumer has to pay for it. So it's an inefficient system. It is lacking in transparency. It is over-the-counter type of transactions, bilaterally you're deciding, a lot of different prices are getting done. And in fact, even banks also are exposing them to some risks. It's not that it's a totally risk-free type of situation. So from that, if you can migrate to this, you will have the advantage of cleansing the system, integrating the system, making it more organized. And when in the committee with IGPC I was discussing, one of the recommendations was, can we get it mandated? But we found that again, mandating, making things mandatory will not work because there has to be a general acceptance. People, otherwise they'll resist, they'll find ways of means of circumventing it. So we found that mandating may be difficult. So what can we do? Can we incentivize? Can we give some special, 2%, 3%, 1%, 0.5% discount here in customs duty so that people, because of that advantage, they will come here? That also, was difficult because it was generally felt that, these are all interfering with the market. What is the point of doing all this? So luckily, when the SEPA came, this 1% discount came, so it was taken up again that why don't you mandate at least this SEPA 200 tons to come through because you are giving a discount. And this is an opportunity you can tell the industry that if you want this discount, you come from this because this has some very important benefits for the country and for the trader, for the jeweler, for everybody. So please come through this. So that policy decision was taken and even announced by the Commerce Minister some time back when he visited us. And for that to be implemented, actually there is a customs portal, which is the ICE gate, that has to be integrated with SEZ online because we are in the SEZ. So I think the SEZ is manual and this is totally automated and computerized. So that we have been taken up as the pilot. Chennai and Gift City were taken up as the pilots, and I'm told that by this month end, that exercise may be over. So we may be coming to a situation where an assured inflow of gold to the tune of whatever 120 to 200 tons which is there under the SEPA will start flowing through the gift. What are the benefits it's offering to the jewelers, to others? I think here, by use of technology, we are trying to see that you have a very good experience. Mr. Gautam, who is the CEO of IIBX, mentioned to me some time back that within a day he has ensured, now an SOP, that within a day, taking foreign exchange from the authorized dealer, sending it to gift, and then trading, then BDR being extinguished, and gold, paying custom duty and receiving the gold, all this within one day. So, and that I think he has an intention of making it, much less than 24 hours also. So, if that sort of thing can be there, if there can be 2-3 settlement cycles, you will have a lot of price advantage. Because here, just-in-time type of imports will take place. You can't bring into the country and keep it and then in 180 days or more settle it. You can't do that. You have to bring it. So I think it will bring in all those advantages. We can also export gold. So we have been pushing the government that you permit accredited refineries to sort of export bars. And we are also looking at having a lot of instruments for hedging, because a lot of people who will be taking gold will expose themselves to that risk, forex risk, exchange risk, all those things. So they can hedge in the IFSCA, and RBI has recently enabled it. Otherwise, you have to do it only in the domestic exchange. Now, we have allowed it that in the IFSCA exchange also, you can do it. So, a lot of futures instruments, etc. And to make it a holistic system, see today, a lot of people, they take gold loan. They can't upfront buy gold. Whereas in an exchange, you have to upfront buy it. Unless you enable gold loan scheme, where they can sort of get it, in fact, in more competitive terms than they are getting now, because 70% or 80% of the gold is through the loan channel. That is also being hopefully operationalized very soon. So we feel that will become another attraction. People will start coming here to see and avail themselves of this gold loan. And banks also can gradually, because you can have gold savings, accumulation schemes, etc. Because there is bullion deposit receipt, there are vaults, underlying bullion is in the vaults. So it's a very safe environment. There is no risk that there is no underlying gold. And banks can then leverage this. If they run gold deposit schemes, etc., instead of borrowing gold, they can leverage this gold and run the gold schemes, just like they do normal lending business. So all these things, then that will make it more sort of, they'll be in a position to offer at a lower rate of interest. They become more competitive. So like this, many measures can be taken. And I am very confident that we are moving slowly, but we are moving in the right direction. And in a matter of, 2 years or so, I think we should really establish ourselves. We'll get an initial impetus through this SEPA, but after that, all the proof of concept will be completed with that SEPA, because that's a huge volume. And then we are also looking at, the QCCP status for IIBX, so that banks feel more comfortable. And we have already banks as professional clearing members. We are trying to, get them as trading members also. That discussions are on. And we are we are also encouraging that bullion bank should come up. There is enough potential for a bullion bank to come up, from amongst the Indian banks. So that should be there. And so all these measures have been taken, and today it's working more as a spot exchange. So the qualified jewelers are coming through a regime. Qualified suppliers are also supplying from remotely. They don't have to nearly set up establishment here. The TRQ holders also are able to come here. So all these measures have been taken. And I'm very confident that this will be a success, and it'll enable us to ultimately become a price influencer or a price maker. And once the connect between the international bullion exchange and the domestic exchanges takes place, where a bullion depository receipt can be converted to a electronic gold receipt, that seamless supply to the domestic industry also will be there, where small jewelers who don't have that sort of net worth and who cannot come to the exchange can also benefit from this high quality and competitively priced gold. So with these words, I thank IGPC and Professor Sahai for giving me this opportunity, and I'm sure many of these issues will be deliberated over the next 2 days, and the IGPC will be able to come up with a lot of recommendations, policy recommendations, which government can consider, regulators can consider, and be able to take full advantage of our preeminent position in the area of gold. Thank you.